What's up, everyone? This is just a video I did not plan for, but it's a very, very important lesson about why risk management is the most important aspect to any trading strategy. So looking at my stats last week from January 7th to January 13th, I had a 54% win rate, yet I still came out with a positive expectancy over 11 trades, and this is due to my risk management. Now in this video, I want to break down every single day. I want to explain what I did right, what I did wrong, and what I need to improve on. That way, everybody watching this could take some important lessons and implement them in their own trading. Again, 11 trades, 54% win rate, and we're going to talk about why risk management is the most important aspect. Now, at the end of every month, I will post my brokerage statement, win or loss, on my Instagram. If you are not following me on there, besides that, it's a very good resource that I post daily trading recaps along with very good tips and tricks that I guarantee you're not going to find anywhere else. The link for this will be in the description below. I recommend following it. But now let's get into the first day, which was Monday the 8th, where I took 3 losing trades. I was 0 for 3. Now, the first thing that I want to talk about, and you're going to see this common similarity as we keep going through the trades, is forget the dollar amount. The dollar amount is irrelevant in any example because it's all about perspective, and trading is a numbers game where scalability is the most important aspect to just making more money. So the metric that I want you all to pay attention to, and the one that I pay attention to the most, is the R multiple, which essentially is our risk to reward ratio. What you're going to notice in my losing trades this week, I've been cutting my losing trades when I am incorrect very fast. I am not holding on to what I call a dead position. So in this trade on Monday, when the market was very strong and I'm trading the S&P 500, we saw a very strong rally. I took 3 losing trades trying to short or reverse or fade that strong uptrending move. By the time I stopped out of this position, it was a minus 0.4 R. Now let's talk about Monday's action because all 3 trades were very identical, where we had a supply zone on Friday, the 5th of January. The market opens on the Monday. We get a strong move up into this supply zone, and I'm essentially looking to sell it or short the supply zone lower. Now, every day in the Discord, I post pre-market plans of the levels that I'm watching and possible trading scenarios, and I also post text commentary of exactly what it is that I'm watching in real time and any trades that I am taking. So the first trade that I saw was around 10:14 in the morning. I saw a buying slow down near the high. That's when the market looked like this. And I was comfortable with the strong rally up into the supply zone to take it short. And this trade did work out for about 4 points in my favor. But then we came to the high and I stopped out of this trade for a 0.40 R multiple. And my plan was a 3-0. Now my next trade, the same day, was the same thing. Around 10:53 a.m. Eastern time, I saw the market come up into our resistance level, higher highs, higher lows. I saw enough things that I was comfortable taking the market short at the supply zone. And if you all know me, I am reading the tape, I am reading the orders coming through the market, and I am gauging how participants are reacting to my levels of interest. As the market came into 4760, I was comfortable with the selling activity that I saw to put risk on short. This trade, again, temporarily worked out for me. The market sold off from that. However, I stopped out for an $800 loss or negative 0.6 R. Now, the third trade this day, the same exact thing. Still seeing strong selling. I'm trying it short. I got in with heavier size. At this point, I'm in with 15 full-size ES contracts. Better confirmation, targeting the same exact plan, a breakdown lower. Eventually stopped out of this trade for a minus 0.5 R multiple. So again, the losses, 3 in a row, but small losses when I am cutting them when they are not moving in my favor pretty much directly after I enter the setup. And if you've all been following me, you all know these are my worst days when I take 2, 3, possibly even 4 different trades trying to fade a very, very strong move. This type of day, this trending day, is one of my worst performing days if I do not get in with the trend early on, because I see the market come into my levels and I try to fade that move. However, I never know what's going to happen next. You never know what's going to happen next. But if you can implement proper risk management like that, then that's the only thing you can do as a trader. And now Tuesday comes, January 9th. This was in the pre-market plan, posted before the market opens up. What I was watching for was as long as the market could hold 4770 and buyers appear, I want to buy the dip, targeting 4788, looking to capitalize on an 18-point rally. While the market opens up, we sell off into 4770. About 20 minutes into the market being open, I found good enough confirmation to take the market long at 4769, risking 4 points to make 11 points in this trade. A little over 2-to-1 risk to reward ratio. So keep in mind, remember my first 3 trades the day before this, 0.40, 0.60, 0.50. If you add them all up, they come to about, in 3 trades, a little over -1 R. In this trade, the market bounces off of that level, and I did not like this pullback down. I wasn't comfortable holding on a 7-point rally. So one of my rules is if I'm up 7-8 points on a trade and I see the market come back down to where I entered, I like getting out at break even, or I like getting out for a small win like I did here, because I always know I can simply re-enter at a different time for possibly even a better price. So after stopping out of that trade for a small profit, right? Got out, moved my stop loss to break even when I was up 7 points, got out for a very small profit. What I saw here was the market again holding that level and breaking above a very strong resistance level that formed on that pullback. So I got in long again, real time, for a very quick scalp with the same exact trading thesis, and I got out of this trade for a positive 2.5 risk to reward ratio. So if we were to look at those 3 trades, this one trade now puts me green on the week just simply by following solid risk parameters. And this really was not even a good setup at all. You know why? Because the market ran another 30 points and I only got about 12 points out of this move, or 10 points out of this move. And it ran another 20, 30 points after I got out of this. So yeah, I got a 2.5 risk to reward, but this would have been a 6-7 risk to reward if I held runners. And again, this is what it looks like. Bounce off that demand zone, 4770. This is the move that I got long. This is where I sold out of my position, and this is when it kept running. And yes, sitting in this move, sitting in the chair and watching the market move like this after I get out definitely hurts, but you can't look at that. You got to look at finding another opportunity, because another opportunity now comes the following day on Wednesday. My pre-market plan, posted about 2 hours before the market even opened, was I was watching 4779 and above resistance 4803, 4809, which you now see with this pink box right here. Now in the Discord, about 15 minutes after the market opens up, what I saw was watching the level 2 at 4803, which is the supply zone, watching the level 2 and seeing how the auction perceives these prices. 15 minutes in, seeing some possible selling here on the tape, enough to put risk on the table short. I was short 4805 with a 4-point stop loss, targeting a 15-point sell-off to the downside. That's very close to 4-to-1 risk to reward. Market rallies up, I spot the selling activity on the tape, and if you ever hear me refer to the tape, it's simply just reading the volume getting transacted at specific prices and gauging how participants perceive those prices. Now pulling up the journal here, what you're gonna see is the short 4805, a planned about 4-to-1 risk to reward ratio, and by the time I got out of this position, due to holding runners, which is something I normally do not like doing, I got out for a little above 3-to-1 R multiple. Again, don't look at the P&L. It's all a numbers game and it's all about perspective. You can do this with 1 or 2 contracts and make a fraction of this profit, and it's just as impressive as somebody that's posting $20, $30, $40,000 profits. This is a numbers game, and you want to be focusing on the R metric because that's the most important thing that you can scale up. 4-point stop loss, 12 to 15 point target, held runners, the runners did not work out, and I got out of this position. If you were to look at all my trades, number 1, I cut them when I am wrong because the market may not move in my favor directly after I enter. One of my rules again is I want to see the market move in my favor relatively fast directly after or close to when I enter that position. If I don't see that, then the way I confirm the setup may be incorrect. And that's how I'm able to know when a trade is going to work out when I enter it. And that's how I know when to cut them when they are not working out directly after I enter it. This is just a personal rule. So after I saw the selling 15 minutes in, basically just walking through this trade, again, up 8 points, gonna place my stop loss above my entry now, 1 point. This can be the start. Don't want this to go red on me. Then the market temporarily, bounces over here, then continues to sell off, going for low a day, scale out along the way, and then the market comes up. I held runners, and again, those runners did not work out, but I already locked in a good portion, 13 points of that move on the sell-off. All right, now here's the best trade all week. This is on the 11th of January, which was Thursday. My main level was 4820, 4829, which is the pink supply box that you see on my charts. What I was watching for was playing this short. If we can reject and sellers appear, targeting about a 20-30 point sell-off lower, because this sets up for sellers to be leveraged into the market and capitalize on a very strong downside move. Then the market opens up, 2 minutes into the market being open, saw some weakness on the tape, tried it short, 4828, targeting a breakdown for about 20 points for 3-point risk. 20-point profit for 3-point risk. I got in the market short. We sold off about 8 points down immediately after I entered this setup, and then reversed, and I stopped out of this position in profit because I did not want it to go red on me. So yes, I realized 0.14, and this may be saying, hey Carmine, follow your plan, because if you did follow your plan, you would have worked out. But the way I like trading is, even if I stop out, I can simply look for a re-entry. And this is what I did. If you stop out of a position, and if Carmine stops out of a position, that's not the end of the world. It's not the end of the day. Look for possibly another opportunity. Because after I stopped out for break even, $300 win, I saw a few minutes later, 10 minutes into the market being open, the same weakness appearing. And I got in short at the same exact price point with the same exact plan. But this time, this trade worked out for me, and we got the sell-off that I wanted. But I got a better price with better risk to reward, and I got over a 4-to-1 R multiple. Held runners on this trade, and the runners did pay. I can't squeeze every single point or every single dollar out of the market, but the most important thing here is my R multiple and how I'm confirming the trades and how I am managing those trades after and especially before I enter that setup. Then on Friday, same exact thing, planned risk to reward ratio. I took 3 trades. 2 were losers. 1 was a break even or just a small win. I'll consider it because I really did not follow my plan. But planned R multiple, about 4-to-1, got out for a minus 0.4. I'm getting out of these trades when my original analysis or thesis is less likely to occur. It was very similar to Monday, where I was essentially trying to reverse the move. I was trying to catch the market long. $1,000 loss there, 0.44 negative. Then the second trade was a small profitable trade, but again, I cut it when it really wasn't working in my favor. I consider this basically a loss or break even in my books. And then the next trade, what I did here was when the conditions do not align with how I trade, or when I simply, I don't know how to describe it, but when I don't feel the market, or when I can't get a good read on it or get a good grab to it, what I do is I size down. Now to start this year, I've sized up. But I've sized down when the conditions don't really align with what I'm seeing or how I am feeling in the market. And yes, this did protect me because the losses would have been a little more on Friday, but it doesn't matter because we have to look at the R multiple, and that's the most important aspect to anybody who is trading. There's just been some really good trading days last week, and hopefully it continues now this week. It's a short trading week with the holiday today on Monday. And as always, I post every single trade, win or loss, not only in the Discord community in real time, but also on my Instagram. I recap every single day, good or bad, on my Instagram story. But besides that, I'm ending it. Peace out.